Hey everyone, and welcome to The Explainer. I am so thrilled to be guiding you through today's topic. We're taking a deep dive into a roadmap that honestly affects pretty much all of us, the KPMG 2026 Personal Tax Planning Guide. Specifically, we're going to break down their analysis of this massive piece of legislation called the One Big Beautiful Bill Act, or, as you'll probably hear it called a lot more often, OB3. Now, I know tax law can often feel like this dense, totally impenetrable forest of numbers and jargon, but my goal today is to make these concepts not just completely accessible, but actually fascinating and highly practical for you. To really wrap our heads around the impact of the OB3 Act, I want you to ask yourself, is your financial house actually ready? Imagine you've spent years, decades even, building and decorating your home, getting everything exactly right. Then, suddenly, out of nowhere, the city comes in and rewrites the zoning laws, the building codes, and even shifts the property lines. Well, that is essentially what the OB3 Act has done to U.S. federal tax regulations. It's a total remodel of the rules. Some walls have been knocked down, new additions have been built, and if we want to thrive in this newly remodeled financial house, we absolutely need to understand the new blueprints. Let's dive into this. Here is our roadmap for today's tour of the new tax landscape. 1. Meet the OB3 Act. 2. Everyday income and deductions. 3. The new charity hurdle. 4. High net worth navigations. And 5. Future-proofing your wealth. Right, let's start right at the foundation. Section 1. Meet the OB3 Act. The KPMG 2026 guide makes one thing crystal clear right out of the gate. OB3 isn't just some temporary coat of paint. No, this legislation introduces permanent changes to U.S. federal tax regulations. The very foundation of our financial house has fundamentally shifted. The rules of the game are locked in, which means we have to permanently adjust how we calculate, save, and strategize for the future. Moving down to the ground floor, let's look at Section 2, Everyday Income and Deductions. According to the guide, OB3 brings permanent changes to income tax brackets. I want you to think of income tax brackets like a ladder you climb as your earnings grow. As you step higher, your marginal tax rate, the exact percentage of tax you pay on that very last dollar of income you earn, well, it increases. The air gets a little thinner up there. What the OB3 Act has actually done is fundamentally adjust the spacing of the rungs on this ladder. Depending on where you stand, the distance to the next rung might be shorter or longer than it was before. Understanding exactly where your marginal income sits on this new ladder is step 1 in making sure you aren't paying more than your fair share.
Now, what's really interesting here is how OB3 handles state and local tax deductions, which we commonly call SALT. Think of your state and local property and income taxes as this really heavy stack of books you have to carry around all day. In the past, the federal government gave you a very small, tightly capped backpack to carry those deductions. If your state taxes were too heavy, well, they wouldn't fit in the bag, and you just had to bear that burden yourself. But OB3 has significantly increased those specific federal deduction limits. Essentially, they've handed you a much larger backpack. You can now fit more of those state burdens into your federal deduction bag. And honestly, that provides some major concrete relief for taxpayers living in high tax jurisdictions.
Let's step into a room that's seen a pretty massive renovation. Section 3. The new charity hurdle. The guide specifically highlights revised rules for charitable giving, calling out a new deduction floor for itemizers. Let's break down that jargon for a second. A deduction floor, which is typically based on a percentage of your adjusted gross income, or AGI, is literally a high jump bar that you now have to clear before your charitable giving actually counts for tax deduction purposes. If the floor is set at a certain dollar amount and your donations fall beneath that bar, you just don't get the extra tax benefit. You have to jump completely over the bar for those specific deductions to kick in. The crucial point here is that itemizers can't just give the way they used to. You've got to be highly strategic to clear this deduction floor hurdle. Instead of making small, steady donations every year that might just bump into the high jump bar and fall flat, the strategy now becomes bundling. This means grouping your planned donations for 2 or 3 years into a single tax year. By bunching them together, maybe utilizing a tool like a donor-advised fund, you take a massive leap, easily clearing that high jump bar and protecting your wallet by securing the maximum allowable deduction. Right, taking the elevator all the way up to the penthouse now, we arrive at Section 4, High Net Worth Navigations. The KPMG guide provides strategic advice tailored specifically for high net worth individuals, and it pays very close attention to complex investments, things like cryptocurrency and derivative transactions. Managing these assets under OB3 is definitely no longer a simple walk through the park. Actually, it's more like navigating a high-stakes, constantly shifting maze. You now have to deal with updated wash sale rules and mark-to-market accounting in the digital asset space. The rules governing how gains, losses, and transfers are taxed here require highly specialized tools and very careful expert guidance to make sure you don't hit a sudden dead end, or worse, face severe unexpected penalties. And while you're carefully wandering through that high-stakes maze, you have to be hyper-aware of where you step. Which brings us to a really vital question. How do you avoid the alternative minimum tax, or AMT, trap? The guide puts a huge emphasis on navigating these alternative minimum tax requirements under OB3. Think of the AMT as a hidden trapdoor in our financial maze. It's basically a parallel tax system designed to ensure wealthy individuals pay a baseline minimum amount of tax, regardless of how many clever deductions they claim. If you claim too many specialized deductions, the floor just gives way, and boom, you fall right into the AMT trapdoor, potentially owing significantly more than your standard tax calculation. Expert navigation is absolutely required to sidestep it safely. Finally, let's step outside our remodeled financial house and take a look at the landscaping. Section 5. Future-proofing your wealth. Wealth management isn't just about protecting what you have today, right? It's about playing the long game. It's really like planting seeds in a financial garden to optimize your long-term health. The guide outlines that securing family tax credits and understanding the new lifetime gift and estate tax exemptions is the very first step. These elements are the essential seeds that, when planted correctly today, yield incredible growth and immense tax efficiency for your family's future generations. Let's move to and see how this builds into a comprehensive strategy. The KPMG guide outlines a chronological approach to cultivating this garden. Step 1 is business entity selection and optimizing Section 1202 qualified small business stock. Are you an LLC, an S-Corp? Choosing the right pot for your business plant dictates how fast and tax-free it grows under OB3. Step 2 involves utilizing specialized structures like grantor trusts for estate planning. Think of trusts as a greenhouse, a protective structure that totally shields your wealth from the harsh weather of estate taxes so it can be passed on safely. And step 3 is expertly managing required minimum distributions from your retirement accounts. This is about controlling exactly how and when you harvest the fruits of your lifelong labor so you don't accidentally trigger unnecessary income spikes. As we wrap up this explainer, I really want to leave you with the overarching premise of the source material. The KPMG guide serves as, quote, a roadmap for adapting to an evolving legislative landscape. Our financial house has been completely remodeled, the maze has shifted, and the garden needs new seeds. The OB3 Act proves that the environment is constantly shifting, and having a meticulously detailed map is the absolute only way to survive and thrive in it. Which brings us to our final thought, and a question I want you to carry with you today. What's your next move in the new OB3 tax landscape? You've seen the blueprints, you know where the trapdoors are, and you know exactly how high that deduction hurdle is. The rules have changed permanently, but with structured, focused learning and proper planning, you have absolutely everything you need to optimize your financial house. Thank you so much for joining me on this explainer. Keep learning, and I will see you next time.